Hello again. Most people think XRP is underperforming. It's quiet. It's sideways. And compared to other crypto charts, it looks wrong. When people see long stretches of price going nowhere, they assume something must be broken. They assume XRP has been left behind. But what if that wrong behavior is actually the pattern most people fail to recognize? And what if misunderstanding that pattern is the real reason so many people get frustrated with XRP? Welcome to XRP Insights. I followed XRP and the broader crypto market through multiple cycles, periods of hype, periods of fear, and long stretches where nothing seemed to happen at all. And throughout all of that, one thing has stayed consistent. XRP confuses people more than almost any other major crypto asset. Not because it lacks supporters, not because it lacks critics, but because most people try to understand it using the same framework they use for Bitcoin, Ethereum, or fast-moving speculative coins. They expect constant action. They expect visible momentum. They expect immediate feedback. XRP rarely offers that. Today, I want to explain the XRP pattern most people misunderstand, calmly, clearly, and without hype. No predictions, no price targets. Just a clearer way to understand what you're actually seeing when you look at XRP's chart. Most crypto investors are conditioned to expect excitement. Big green candles, fast momentum, clear breakouts that feel obvious in hindsight. That's what success looks like in most people's minds. Bitcoin does this well. Ethereum does it too. Many altcoins do it, at least temporarily. XRP doesn't. Instead, XRP often spends long stretches doing very little on the surface. Price moves sideways. Volatility tightens. The chart looks quiet, sometimes even boring. And boredom is uncomfortable. When people expect excitement and get silence, they don't usually say, "This is a different phase of the market." They say, "Something must be wrong." But sideways movement doesn't automatically mean failure. In traditional markets, long periods of consolidation are often where positions are built, not where stories are told. Crypto investors aren't used to that pace. XRP forces people to confront it. And for many people, that discomfort becomes the reason they walk away. Most markets move through recognizable phases. The first phase is distribution, where early participants sell into strength and momentum looks obvious. The second phase is accumulation, where positions are built slowly, quietly, and without emotional price movement. The third phase is compression, where price tightens and volatility fades even further. Most people are only comfortable with the first phase. They want movement they can see. They want confirmation they can feel. They want action they can point to. Accumulation and compression don't offer that. They feel slow. They feel uncertain. They feel unproductive. Historically, XRP spends far more time in these quieter phases than most people expect. That doesn't mean nothing is happening. It means the activity is structural, not emotional. And structure is easy to miss if you've been trained to chase excitement instead of observe positioning. Even experienced traders and analysts struggle with XRP. And it's not because they lack intelligence or experience. It's because most technical tools are designed for momentum assets. Assets that trend clearly and reward quick reactions. XRP often doesn't behave that way. It behaves more like a positioning asset. When volatility drops and price goes quiet, many professionals interpret that as weakness. They assume interest has disappeared. But quiet markets are often where positioning happens. They aren't exciting. They aren't dramatic. And because of that, they're easy to dismiss. XRP doesn't reward constant attention. It rewards patience. And patience is uncomfortable in a market built around speed. Here are the most common mistakes people make when judging XRP. Mistake number 1. Expecting XRP to catch up to other cryptocurrencies. Mistake number 2. Assuming sideways price action means something is broken. Mistake number 3. Constantly comparing XRP to hype-driven assets. XRP tests patience more than most assets. It forces people to sit with boredom, doubt, and comparison. People watch other coins move and start questioning their own decisions. Many investors don't leave XRP because it failed. They leave because they couldn't tolerate waiting. Markets often move capital from impatient hands to patient ones, quietly, over time, and XRP makes that process very visible. This doesn't mean XRP is guaranteed to do anything. There are no promises here, no timelines, no price targets. Understanding structure doesn't predict outcomes, but misunderstanding structure almost always leads to frustration. When people say XRP isn't moving, what they usually mean is that it isn't behaving the way they expect. Markets don't exist to meet expectations. They exist to test them. And XRP's pattern isn't obvious, which is exactly why it confuses so many people. Clarity doesn't tell you what will happen next. It helps you stop misreading what's happening now. If XRP has ever confused you, you're not alone. But confusion often fades once you stop expecting XRP to behave like everything else. If you want clear, grounded explanations without hype or noise, subscribe to XRP Insights. Thanks for watching, and I'll see you in the next one.